Good morning, all, and welcome to week 3 of the GoPro Trading Academy Trading Challenge. I hope you guys had a fabulous weekend and that you used some of that time to update your charts. So this morning, as always, and by popular request, we're going to again do a Monday morning market review where I will just quite quickly run through the currency pairs just to look at what's happened, where we are at on certainly the two main time frames that I teach you guys to look at, which is, well, primarily daily, and then of course also weekly, especially for those the higher time frame trading strategies. So it's not my intention to delve into strategy specifics. This is still really about technical analysis and identifying market conditions, or another way of putting that is identifying where we are at probabilistically in the life cycle of each market on the time frames that we're interested in. So here we go. First of all, as always, we start with Euro USD, looking on the daily time frame. And just before I jump into this, I just wanted to comment as well that, as you know, we're coming out of this period of the US elections where there's been quite a lot of volatility. And again, last week, we did see quite a lot of that. Now, the euro is not that representative of that, but I'm sure you guys will agree on many of the other pairs, we saw significant volatility. Certainly last week, Monday, there was some huge market movement in different pairs or different instruments. So it really does reinforce how important it is to always be looking to limit your downside first. If you got caught on the wrong side of any one of those without a stop loss in place, it would have caused enormous pain. Yeah, that just makes sure that you remember this is not about being right about anything. It is about being consistent in the application of an edge that gives you a positive expectancy. We see it over and over again that people don't realize how important it is to ensure that you have that you minimize your losses, that if you don't allow any one loss to affect your account overall. So that's one of the things people do generally allow to happen, mainly because they haven't developed that probabilistic mindset. They are trying to be right about the market. They're trying to avoid losing trades. All of these are signs of an amateur, to be honest. All right, so Mooney, you got a few quick questions for me. I'll come back to that if you don't mind at the end. All right, so coming back to this once again, it has been quite difficult trading conditions. Last week was not easy. It was one of those weeks where you look to emerge without having had any significant losses. If you came out of last week profitable, well, that would be quite spectacular, actually. There were certainly some winning trades, but there were also quite a lot of losing trades, especially where the market gave some aggressive reversals. And likewise as well, just be careful about which markets you look to trade. We are quite strict about that. And although I'm showing you a couple of different variations from a technical analysis point of view, we are still nevertheless very strict about what markets we look to trade for particular strategies. Okay, so the Euro USD on the daily time frame is still very much range bound. So we've saw it test. In fact, we spoke about it a week ago. We saw this test the preceding resistance levels here, and it failed again. So you'll also notice on Monday, it continued to test that level, but Monday was that reversal day. So coming up to test that level again. Weekly time frame, nothing really happening here. One additional point that I'm making, I'm using a demo account here just to teach you guys, because that's what you're using for the challenge. I'm sticking to exactly the same type of account. I see, however, last week, certainly on my platform, that there's some missing data, especially on the weekly time frame. It's not going to make any real difference to our analysis, but in case you've noticed that yourselves, it didn't happen on the live accounts. It's just on the demo account. All right, so that's the euro. Moving rapidly on. The pound has been pretty strong. Okay, it's one of the stronger currencies at the moment. Again, we had that pullback last week, but we did also have a break above the resistance level, unlike the euro. So we did see that through the course of last week. However, it did pull back and close back inside of that last week, Thursday. But again, we had some interesting price behavior where, of course, we had an outside close on Friday. So some of the data is missing here as well, as you might notice, but it doesn't change that fundamental fact that we had an outside close on Friday. So that's in terms of our channel trading. When it comes to the W pattern that we're looking at over here, we certainly did have a outside C close as well. So that did clearly close above X. So if you're looking to trade that using the WM pattern, then of course this morning you'd be looking to go long on this on the lower time frame. So those of you using the H4 impulse should already be in a trade on this. In fact, you could have entered pretty much close to market open sometime this morning. All right, so again, I'm not getting drawn into strategy specifics, just using that for illustration. Dollar yen, very much inside of the channel on daily. We did see that test outside as well a couple of weeks ago. We spoke about that on weekly, but it's very much back inside of that channel. So we're not really interested in this one at all for any trending type strategies, which is obviously what I'm focusing on here. Dollar Swiss, just a bit of an inverse picture of what it looks like on the Euro USD. Still range bound, no question about that, both on daily and weekly, sitting on the support level still at the moment. USD CAD, the loonie, right, so this one on the daily time frame, which is obviously our selection time frame for trading on the lower time frames, we did see an inside close, both in terms of our channel traders as well as the potential M pattern that we're seeing stack up over here. So, we did see the market close inside of the XA leg, or the potential XA leg, which kind of disqualifies that. If you are a channel trader, however, and we do get an outside close below the support level, then you may well be looking to trade this in a bearish direction, depending on what happens today and tomorrow. But as long as we get that outside close over there, it's still at the moment looking more bearish than anything else. But having said that, let's just see what it does with this old support level. I'm not spending much time on a weekly today, simply because there's just really nothing to look at. Just about everything is inside the channels, even the XA channel, let alone the historical Donchian channels. If you got any questions for me, as always, folks, please do drop them in there. Let me know and I will answer them either now, or if you're watching this as a recording, please drop your questions or comments into the comments below this. All right, looking at the Aussie. So this is not keeping up with the Kiwi, certainly. We had this bullish breakout previously, but as you can see, it turned out to be a false breakout with a breakdown in cyclicity for the moment anyway. And there's nothing doing for us there at all. But moving rapidly on to the Kiwi, you'll notice that this is a different story altogether, where we saw this bullish breakout. It's clearly outside of all of our channels on the daily time frame. Now, certainly for those of you who look just for a bullish candle, even in a retracement wave, as an indication that the next impulse wave potentially is starting, you would have actually gone long on this morning already. Otherwise, if you're waiting for the confirmation of this isolated low, you'll need to wait until the end of today. However, obviously very bullish. The Kiwi continues to be the strongest currency across all the currency pairs that we look at. And even on the weekly, this is one of the few currencies that actually have managed to break out of the weekly time frame. So if you're trading something like a daily impulse strategy, then clearly an impulse candle today, the close of today, would be the final selection criteria, obviously, for a daily impulse trade. Now, guys, just remember as well, we're not guaranteeing ever. We're looking to find strategies that guarantee us winners. we're looking to find strategies that give us an edge, and not just any kind of an edge, the kind of edge that helps us first and foremost to limit downside and maximize upside. That's otherwise known as a convex optionality curve. So it is an absolutely essential element in the survival of any trader. So we will have our more than our fair share, if you like, of losing trades, but remember that they are going to be significantly smaller on average than the winners. And overall, of course, our expectancy is positive, which means for every dollar we lose, we make more, sometimes significantly more than $1. Okay, so that's the Kiwi. One of the easiest, most obvious setups across the board that we have, because it is the New Zealand dollar is so strongly bullish. And of course, we're seeing weakness on the US dollar. All right, dropping down to the yen pairs now, all the yen crosses. Euro yen, nothing, obviously very much inside of all of the channels there. So we're not interested in that at all. Whereas on the other hand, the GBP, JPY, you'll notice on the daily time frame how at the moment we've got a potential outside C close here with respect to point X, as well as with respect to our channels. So just keep an eye on that. Just making sure that's in the right place. Slightly. All right, so you'll notice that we've had continual closes outside the channel for now. Okay, for now. So if we do, even with an inside bar here today, which it's likely that it won't be, but if it were to be an inside bar, you guys must remember what an inside bar means. It is still confirmation that our final selection criteria are met on the selection time frame, and you then drop down to your execution time frame for the last selection criterion and your timing. So this one, yes, certainly looking promising. Certainly looking promising. If we look at the weekly, however, there's nothing doing there. It's only really daily and lower that we're interested in. Swiss yen, likewise, similar to the euro yen, nothing at all that's interesting here. CAD yen, we had for you for the potential W pattern, Friday's candle closed back inside our future X. So yeah, that's not going to be doing anything for us. And of course, weekly likewise, all looking very much sideways. So not interested in that either. Aussie yen also, it gave a half-hearted attempt, didn't it? So, with that strong push last week, Monday, I think it was Tuesday, yep, Monday, where we did have a couple of outside closes over here, but it rolled over on Thursday and closed back inside of our channel. However, as a potential a W pattern, absolutely. As you can see, that's our future X point being over there. The market is nowhere near that at the moment. So if we do get an isolated low here, then you may well want to take that as a bullish trade on the lower time frame, depending on what your strategy selection criteria are asking for. And likewise, of course, again with the Kiwi, so this being Kiwi yen, very much outside of our full wave historical Donchian channel. And also, of course, if we do get any kind of a reversal over here, then we'd be happy to look to trade this in a bullish direction on the lower time frame. Looking at weekly as well. Again, folks, we're missing a bit of data over here on the demo accounts, but it did not close last week outside of that channel, unlike the Kiwi dollar. So that's nothing doing for daily impulse, but certainly for our lower time frame strategies, this is still, it's also looking pretty bullish. Also remember, folks, don't get caught up in too many trades with the same currency. Remember your risk budgeting, very, very important. Okay, moving on to GBP crosses. Here we have actually Euro crosses. Euro GBP, yeah, daily time frame. We had that bearish move last week as well, but it's all come back inside. So none of the broken support levels have been respected as resistance. Certainly not with that strong bullish candle on Thursday. So yeah, we're kind of not really interested in that. And same thing on weekly, it's pretty pathetic. Okay, a pair that I don't really trade, Euro Swiss, last week Monday's candle there being very obvious again, where, yeah, we did have that bullish breakout, but as often happens with this currency pair, it's just been going sideways ever since. So only really interested in looking at this in terms of our scoring. And we will, if there's a interest in this, we will show you how to score the different currencies. So that it's like a currency strength meter, but using price action. All right, so Euro Cad, likewise, strong reversal, tried in a bearish direction, failed dismally, back inside of the range. Nothing doing here on either time frame. So Euro Aussie, this again showing some Aussie strength more than Euro weakness here. This certainly, okay, and some folks might already be in this in a bearish direction. We've got our 4-wave channel here, and you'll notice that it did in fact respect that as a resistance level. So certainly programmatically, it continued to close outside of our channel. We had that bearish high test or hammer from Friday. So I know that some folks will have taken that as the higher time frame selection criteria having been met, and then drop down to a lower time frame to look to execute a trade down here. So yeah, so that certainly works both in terms of a channel breakout as well as our potential M pattern, because our future X point is over here, and we've definitely got an outside C close if the market reverses at this point. Your NZD again here, Kiwi strength, same picture, basically just a little bit more obvious. Again, I know that some of you guys will have already shorted this market first thing this morning. So what are we looking at? Yeah, so this last candle from Friday is in fact an impulse candle from a 4-hour point of view. You'll recall we look at the preceding 2 candles. So some of you would have shorted this absolutely first thing this morning. Okay, if you are being a little bit more cautious about it and taking the more conservative view, then you'll wait for this high to be isolated, which will very likely happen today. Not that I'm trying to make a prediction there, but if this candle were to close similar to what it looks like now, then certainly it indicates that this retracement wave is over, and we'd be looking to trade this again in the so probabilistically expecting the next wave to be a bearish impulse wave. Let's just also quickly look at the weekly time frame. Once again, it did test outside of this last week, but all the closes were inside of that channel. GBP Swiss, so another pretty obvious picture as far as I'm concerned. The only difference here is that Friday we had an inside bar. So both in terms of a potential W pattern with our future point X being here, as well as a channel breakout, this is a bullish setup as of this morning. So, depending on what your strategy says, if you were trading this certainly on if you're trading this on an H4 impulse, then you would have gone long here at about 4 a.m. this morning. So let's just see what happens there. Mondays are often quite volatile. Obviously, they're probably the trickiest days to trade on. We know that, but there is still a positive expectancy across most of the pairs. Moving on to GBP CAD, tested that resistance level last week, but so far nothing doing. We had that bearish gap over the weekend, and of course nothing on weekly either. So not interested in that at all. The only thing we would look to trade many of these pairs on are actually overlay or ranging strategies, which we're not really focused on at the moment. Okay, so this one closed just inside point X through the course of last week. So it just doesn't meet our criteria. That's fine. We've got enough trades on the Aussie and the Kiwi as it is. But as you can see, we are also inside of our historical dodging channel. GBP NZD, on the other hand, of course, the Kiwi strength showing itself yet again. We did have an outside close, both in terms of our channel and our point X, which in this case are actually exactly the same price level. So yeah, this if you're looking for this to be traded, we couldn't take anything this morning because that candle did not close in the bottom half of its price territory. So we are looking for that to be isolated before potentially dropping down to the lower time frame to execute there. But that would only be first thing tomorrow. CAD Swiss. So yeah, here you can see that the temporary strength we had in the weakness, I should say, that we had in the Swiss franc last week didn't hold it, and it closed back inside. So there's an example of that Monday spike in volatility. Certainly it took off like a rocket, but then it just came all the way back and closed inside of everything, both of our current XA or future XA leg, as well as our historical downtrend channel. So not interested in that. We've got better stuff to look at. Point being, this is one of them. Okay, so Aussie Swiss, where we saw that breakout of all of our channels, and at the moment, not only are we seeing certainly future point X being respected, it's a long way away, but also the top of all of our channels. So, well, certainly our historical downtrend channels, 3 and 4-way channels. So the market opened up a bit lower this morning, but remember the lowest close is, sorry, not this morning, on Friday. The lowest close was Thursday, which was outside of those channels. Some of you, again, would have taken that as an indication to go long. But if you're waiting, if you take the more conservative view, then you're waiting for an isolated low. And that would potentially only happen at the end of today. Here we had a breakout, Aussie Cad, so Canadian dollar weakness in line with its correlation to the US dollar. So yeah, here we saw again last week a continual testing of this collective sort of resistance level here. We finally got the breakout on Friday. So this is a confirmed impulse wave on the daily time frame. If that is if that's suitable or a valid criteria for your strategy, then you need to be looking to trade this. For us, that would be on the H4 impulse. So you may well be in this one already from first thing this morning. Aussie Kiwi, yeah, we've spoken about this one before. It's had some long runs on the daily time frame. And some deep pullbacks as well. And then last week we had that very significant rollover from that deep pullback, and it just managed to close outside of that channel and then come back inside again last week, Thursday, Friday. So yeah, it's closed back inside of that channel as well as our future XA leg. So, you know, too much weakness for this one, unfortunately. So yeah, just keep an eye on that. But at the moment, it's not really something we're looking to trade. Right, more New Zealand dollar action, obviously. So here on Kiwi Swiss, you can see we've had a very strong breakout. Again, some of you might be long on this already. Just a reminder, don't trade. Just remember your risk budgeting across your different instruments and your individual currencies. So there's a lot happening on the New Zealand dollar. It's nice when it works, but don't go over your maximum risk budget. So again, if you're looking to trade this with a confirmed isolated low, you'll be looking for today's candle to close pretty much as it looks now, or even higher, and then you could drop down to the lower time frames for final selection criteria and execution. So yeah, looking good. Also, if you were trading, some of these I haven't really commented on these today, but your continuation entries, something like the deep or either the kickstart strategies. In fact, if you're looking at the kickstart strategies, then clearly Friday was a setup, and you would have gone long this morning with a pending order having been triggered through the course of this morning. So that one will already be rolling, and there's a couple of others that look like that as well. Okay, so just looking at our weekly time frame on this, again, testing that resistance level. Let's see what happens. A lot of people have said to me as well on this as well, if we haven't actually broken through an old level, be it a resistance level or support level, and in this case, you'll notice that it goes all the way back, to June. And it tested it, of course, last week, just managed to close outside, but then rolled over again. So a lot of folks are saying to me, why would you do that? Because it's failed to break through that. Well, it's because we're not trying to predict the market. And we understand that it may well fail to break through that, in which case our bullish trades here won't work out. But there's an almost equal possibility, maybe a 40% chance of this breaking through this level, in which case all of these trades will work out. And with our limiting of downside, especially using that manual trailing stop, and a much bigger potential upside, especially if you're using advanced targeting, we have a positive expectancy. So we're not trying to predict or be right about it breaking through that level. It's not about that. It's about making sure that we don't miss the big winners. We're not worried about having small losers. We know we have them all the time. We are concerned about missing out on the big winners. Okay, so that's Kiwi Swiss. Let's look at our last currency pair. Kiwi Cad, so more of that New Zealand dollar action, of course, same things, exactly the same picture, basically. And even on the weekly, testing this resistance level here. And well, let's see what happens. I mean, as I say, it's either going to break it or it's not. If it does break it, we're going to have lots of winning trades, nice big fat ones. Whereas if it doesn't, we're going to have a few small losing trades. All right, so that's the name of the game. Let's have a quick look at gold. You can see that huge rollover last week. Again, this would have caused you to have a losing trade or two. Certainly, no, well, one losing trade. Because we did have that preceding breakout, certainly for those of you channel traders, we did have a long trade here on our lower time frame strategy, and that got stopped out. But you definitely did not want to have anything other than just get stopped out, because it just kept on going last week, Monday. But it did come back down to our support level, and it bounced off of that. So nothing doing on gold for us again. And those really are the main ones that I wanted to look at. Muna, again, coming back to your questions. Okay, you have a market on your shortlist and it gaps up at the open. What do you do? Okay, well, gaps, obviously over a weekend especially, are a part of trading. So you follow the rules, to be honest. There are certain limits as far as I'm concerned. And again, and this is a very good question, but it's one where it's not easy to give a hard and fast rule. If you've got a very big gap, and when I say big, like hundreds of pips, and it has happened, then I would obviously look to step back, because that indicates a massive change in market sentiment about something, and also as a result of that caused a breakdown in liquidity of the market. So a gap is exactly that. A gap is a breakdown in liquidity of the market. So one of the core risks that we face as traders is the volatility and liquidity, which is why we like to trade the much more liquid instruments. We don't like trading lower liquidity instruments. It's important to stick with those. So again, caution with things like that is often called for. More often than not, the market will try to fill a gap. So if you've got a big gap and you immediately want to jump into a trade, look, again, coming back to my previous statement, this is not about being right. This is about making sure that you don't miss out on big winners. But that has to be seen in the context of risk management. And remember, risk management is always at the forefront of our minds. And big gaps, as I say, are an indication of a major risk factor, which is breakdown in liquidity. All right, so caution is called for. What are the differences between Gen 30 and DAX? Nothing. It's the same thing, just different brokers will give them different names. Unfortunately, when you move away from the main markets, especially currency pairs, you're going to see different labels given to the same market. And that's a perfect example, actually. So Aussie 200, SPI 200, same thing. US 30, Dow Jones 30, same thing. They are exactly the same market, okay? So no, it doesn't affect how you trade them. They are exactly the same market. Right, so that answers those questions. Any other questions for me, folks, this morning, on this beautiful Monday? Well, it's certainly beautiful down here in the Southern Cape. All good? You're welcome. I'm certainly hoping that we'll see sort of a calming down in the volatility of the markets this week, but we never know. When I say volatility, we don't mind directional volatility. We do mind this very choppy behavior that we've seen. So it's made it quite difficult, as I said earlier, to be profitable. It's one of those periods where you look to emerge relatively unscathed rather than rich. Having said that, our Bitcoin trading strategy is also quite a good barometer. It did make a profit last week, but probably the smallest weekly profit that we have seen in a long time. I think it made just over 1% for the whole week, which is quite strange. You know, normally we look at around 2%. But in any case, yeah, it's just a barometer. It does show that even with the best strategies, they had quite a hard time of it last week. And that's a much higher frequency trading strategy, one which, trades on the much lower time frames, like the 5 and 15-minute chart. So even then, it struggled a bit. But that's always the key sort of indicator for me as to the robustness or even anti-fragility of a strategy is how little you lose when conditions are very challenging. And choppy market conditions with lots of false breakouts are the most challenging conditions for us. So we do understand with our strategies, with our anti-fragile strategies, with a convex optionality curve, we understand that we're going to have these strings of losers or periods of losing, longer periods of losing than periods of winning. We know that. But the amount you lose in those periods is relatively little compared to the amount that you make in those short winning streaks. One of the most anti-fragile strategies that we've ever traded lost money over 95% of the time. So most people say it must be crazy to trade that. Well, certainly it's difficult to trade, but that's because of the mental side of trading it and being a human being where we're conditioned to try and engineer favorable outcomes. But it was highly profitable because the 5% odd of the time that it did make money, it would make a fortune. And then in between those long periods of time of bleeding, but not too much. So, where you potentially could go for several weeks and end up with a drawdown of 5 to 8%. And we would only be risking about 0.25% per trade. 5 to 8% drawdown over a period of about a month. Then within the space of literally 2 or 3 days, it would make 20+%. So, that's really the name of the game. And those are core strategies. They are the most profitable strategies for the least amount of risk, but they have this significant downside in that you never know when you're going to make money. And that is challenging, especially when you're trading other people's money. So on that note as well, I hope you guys have heard and have seen our emails, certainly those of you who are members of the Academy. We have accessed financial backing for funded accounts for you guys, those who are interested. Please do drop us a line if you are interested in getting involved in that, or if you're interested in getting involved in our passive trading opportunity, where our funds have averaged between sort of 7 and 12% per month for 18 months. Very, very good. And in fact, the what was it, to end of September. I haven't got the October stats, but the 12 months to end of September was 268%, if I'm not very much mistaken. And of course, also, we always talk about what currency to be denominated in, and that's very, very important for your overall risk management. You need to make sure that you are protected. That's obviously a bigger topic for another day. Right, folks, so hopefully you found today useful and interesting for your trading throughout the week. Remember, I'm not here to tell you what strategy to trade, certainly for the challenge. I'm just here to help illustrate the technical analysis methodology we use to identify market conditions. Remember that even then, that's a probabilistic approach. We're not saying this is trending or this is ranging, and therefore this will happen, because nobody knows what's going to happen. All we could say is that right now, at the moment, this is what our methodology is telling us. And based on that, we can then probabilistically make the right decisions in terms of the execution of our strategies, which hopefully all of your core strategies are not only giving you an edge, but an edge that seeks to limit downside first and only then to maximize upside. All right, guys, look out for more announcements for trading throughout this week. And I will go into some more detail around the Donshin channels. And at some point as well, we're going to revise how to score the different currencies to give you a price action based currency strength meter. That is something that can give you quite a significant edge in the market. But that's a topic that we'll leave for another day. And of course, if there's anything else that you'd like me to cover, please just do drop it into the comments below this, and I will incorporate that into my discussions with you guys. All right, so folks, have an absolutely fabulous week further. Enjoy the trading. Always remember to manage risk first, and then I know that I'll be seeing you again next week. You're welcome, Jürgen. All right, guys. Take care. No problem. God bless and bye for now.